everyone. I'm Megan Trask, Director of our Investment Committee here at CTWM. I'm joined by our Assistant Director, John Shanley. We're here today to talk about an update to our global target investment portfolios. Specifically, we're going to be talking about our international and emerging market allocations today. You know, with all that's going on in the world, it might seem like obvious timing to talk about these two allocations. We do want to make clear that while recent geopolitical events were a factor, these positions were actually under review in our investment committee really for the last 4, 5, 6 months.
Right.
And so the scope is really much broader and much more long-term than just the last couple of months. You know, the investment committee, we asked ourselves two primary questions. Do we want to maintain our international and emerging market exposure? And if so, how best to access that space? I'm going to let John dive into the first question that we asked ourselves and where we came out.
Yeah, Megan, I think the best place to start this conversation is really back to our core philosophies around investing, and that's the idea of diversification. I think over the last decade, 12 years or so, emerging markets and international have been areas of the market that have underperformed compared to the United States. What you'll see here on the screen is a depiction of emerging markets and international performance compared to United States performance. That big gray bar that you see over the last 12 years is the outperformance of U.S. markets compared to international markets. And so it's obvious to ask yourself that question, well, why am I investing in international at all, right? Is U.S. the place to be? But what this chart also depicts is that these things tend to move in cycles, right? Markets will tend to move in various different ways over extended periods of time. And so as a starting point, we still believe that international and emerging markets play an important role in a portfolio. We continue to ask ourselves that question from a longer term perspective, a shorter term perspective because of everything that's going on. And that has led to some of the change today. We wanted to make some slight reductions to international and emerging markets, but we also want to always point out to the fact that diversification is the key to investing success over any prolonged period of time. We've joked about it in prior videos, but you know, these last 2 years have shown us that the future is uncertain, and we have to have humility when we think about investing in the landscape that we're going to place. So in international and emerging markets, we're still going to hold an allocation to those two places, but we're making a slight reduction down, just given the fact that there is some heightened uncertainty, and we believe that the United States is well positioned comparatively.
John, very well said. Thank you. You know, far be it from us to try to determine exactly when international markets are going to outperform U.S. markets, when U.S. markets are going to outperform international. From a long-term perspective, we do have conviction that we want to maintain our allocations to these areas. If we think about some of the demographic trends, like population growth and emerging middle classes in some countries like India, like Brazil, like Mexico, there's just powerful trends there and an opportunity for investors to earn returns over time.
I think, again, this is a good representation of just how we view markets and our role in investing portfolios is we think about it from a longer term perspective as our starting point. And Megan, as you allude to, there's so much opportunity there, but also from a shorter term perspective, we'll be tactical and change the weighting based upon kind of the short term market movements or economic events. So I think today is a kind of a good representation of how that philosophy will dictate how portfolios are managed. And that brings us to the second question, which is we've made a decision about changing some of our exposures, but then it comes to what actual position or what fund we're going to be using in the emerging market space. So Megan, would love to hear a little bit more about that.
Absolutely. So we have decided to change the manager that we use in the emerging market space. So our current manager, the approach they take is really bottoms up, where they're really just looking at the individual company in the emerging market and trying to decide which company will outperform and provide growth over the long term. They're not so much taking into consideration geopolitical events or risks or which countries they have exposure to. Given today's environment, we've decided to reallocate to a manager that does take that broader lens into account, that does look at things like geopolitical risks when making investment decisions. The world is changing. The world has changed over the last decade, and having a manager that responds to those changes, we feel, is very prudent in this environment.
Yeah, geopolitics has been something that's kind of on the back burner these last handful of years. There's obviously always noise out there, but when we think about the future and kind of the changing economic landscape, this extra lens we think will add a lot of value to how we approach investing in really uncertain markets, which emerging markets are.
So the investment committee will be implementing this change over the next week or two. As always, if you have any questions, please reach out to your advisory team. With that, thank you very much for being with us today.
Thank you.